before that, we'll discuss the upcoming events. And this time it's quite a busy week, so it wasn't so busy so far, but now things are warming up. Mario Draghi is here in Spain, he's in Madrid. He will be speaking later, and will he be a bit more upbeat about growth? Core inflation reached the highest levels in 4 years. Will he be more upbeat? Usually Draghi is the dovish one on the governing council, letting the Germans and other northerners be a bit more upbeat, a bit hawkish on inflation. So let's see, the euro is waiting. For those trading the Canadian dollar, we have a rate decision. No changes expected. The interest rate is likely to remain at 0.5%. It all depends on the tone. Inflation is lower. I would expect a more dovish tone from Stefan Polos and his colleagues in Ottawa. But, well, we'll have to wait and see. At the same time, we have U.S. existing home sales. Sales of second-hand homes are the vast majority of the market, but they don't have the same economic impact as new home sales. We have oil inventories. The last report before the OPEC meeting, we had this weekly report impact currencies quite a bit, and the Fed meeting minutes. So let's dedicate a bit more time on that. A few things are important to remember. In theory, it's just a protocol, just what happened, a documentation of what happened in the last meeting, which was about 3 weeks ago, exactly 3 weeks ago. Okay, so in theory, this is a stale document that reflects the opinions of the Fed members 3 weeks ago. But we do know that this document is revised until the very last moment. So we're not going to have there anything that these members, Yellen and her colleagues, didn't say. It's not going to be a total lie. But the tone and the wording can be edited until the very last moment to reflect a message that the Fed wants to send us, the markets. In many cases in the past, we had the Fed go hawkish on the statement and a bit more dovish in the meeting minutes, or the other way around, sort of balancing things out. The big question is what's going to be in June. Since their last meeting, we had a few disappointing figures. Weak wage growth. We'll have another more figures about growth. This week, retail sales were relatively poor, and inflation, the second mandate of the Fed alongside jobs, it was weak. So the Fed's favorite inflation figure, the core PCE price index, fell to 1.6 from 1.8, and the more generic inflation measure, core CPI, it dropped from 1.8, dropped from above 2% to 1.9%. Okay, so I expect them to be a bit more dovish. I expect them to lower the odds of a June rate hike, but of course you should trade after the event, not before. But that's certainly the most important event of the week, unless some surprise comes again about Trump. But assuming no breaking news, this is the biggest event of the week, the Fed meeting minutes. In some cases in the past, it has been a snoozer, a non-event, but because the odds for rate hike, it's a bit uncertain, we might have some market-moving events today. Okay, so that's today. Let's continue to tomorrow. The OPEC meetings left front and center. You know what? Let's focus a bit on that as well. We had a deal between OPEC members, most prominently Saudi Arabia and Iraq, Libya, Algeria, some Venezuela and Nigeria, some South American countries, to cut production. The deal began in January and ends very soon, at the end of June. Now they want to extend it. And the deal also included non-OPEC countries, most prominently Russia. Russia, Saudi Arabia, and the United States are the largest producers. Okay? So they cut production, announced it back in November. It stabilized oil prices. They began implementing it in January. Saudi Arabia is doing most of the work for its other OPEC members, which are producing, basically as much as they can. And now there is talk about extending it either by 6, 9, or 12 months. I think it's converging to around 9 months, which is more than the current deal for 6 months. So that should keep oil prices elevated and, of course, help the Canadian dollar. There was also talk about deepening the deal, so cutting more than the previous cuts. I'm not sure that will happen. We'll have to wait and see. But I believe it will be on the same conditions and for 9 months. That's more or less what's priced in. Now, I'm a bit more bullish than I used to be on oil because shale production in the US, yes, it continues rising, but it's slowing down. It's not accelerating at the same pace. So production fell from 9.6 to 8.7 million barrels per day. Now it's back up to 9.3. It could inch up a bit more, but not at the same pace. And if OPEC cuts, there might be a future for oil bulls, okay? But you never know with OPEC meetings until the very last moment. It happens tomorrow in Vienna. All right, so we have these two big events, Fed minutes and OPEC, but we have other things as well. We have UK GDP. Usually revisions are quite minimal or non-existent. In any case, UK GDP was strong after the EU referendum in the latter half of 2016, but in 2017, GDP growth fell by half, only 0.3. This will likely be confirmed. We also have jobless claims, and among Fed speakers, we have quite a few. I would point to Lael Brainard, a permanent voter, mentioned her before. She will be speaking tomorrow as well. And on Friday, we have durable goods orders, which is for the month, of April. But the markets will be focused a bit more on the second release of GDP. The first release showed only 0.7%. This time an upgrade to 0.9 is expected. In any case, we'll cover it live on FX Street with Valeria Bednarek and Mauricio Carrillo. So that's Friday, 12:30 GMT. We'll begin our broadcast as usual around 12:15, 15 minutes before the event. And to close the week, we have a revised version of the consumer sentiment. So quite a few events this week, GDP in the United States, OPEC and the Fed minutes, a big event every day. Okay.